Welcome back to Stocklabs for another market recap. We are at the tail end of September, which means the end of the quarter is coming up, end of the month, all of that stuff. And this past week was pretty nasty for markets. So performance that we had, crude oil was up almost 5%. As far as equities go, the Qs were down 5%. Over 5%. Small cap Russell down 7.5%, by far the underperformer. S&P was down 4.5%, and the Dow was down a little less than 2.75%. Gold was down about 1%. Credit was down. Bonds were down big again. This minus 8% for TLT for the year. I think this is going to make for, well, we're not at the end of the year yet, but we're on pace for, I think, a third consecutive year of bond declines. So not sure when the last time that happened was. Probably not in my lifetime. Anyway, so bad week for stocks. It was basically soft the entire time. There wasn't any real attempt by bulls to sort of take control of the tape. As far as the leadership stocks that we have, Meta, Facebook was the only one that was green on the week, up 1% basically. Tesla was flat, so held up versus the NASDAQ. And same thing with Apple, kind of held up for the week. The rest were basically kind of in line with the NASDAQ or worse. So Amazon down 8%, Netflix down 13.5%, NVIDIA down 14%. A lot of the momentum AI trade, as far as like if you're looking at NVIDIA and semiconductors, these sorts of things, the air has really come out of that. I think, it kind of reached a fever pitch a few weeks back, and it's kind of just been leaking ever since then. So kind of a precarious spot for NVIDIA, kind of down here around 400. Probably it'll go below 400 at some point before the end of the year, but we'll see. So yeah, leadership stocks weak, market overall weak. So there wasn't a whole lot of positive takeaways. Breadth-wise, most of the sectors were all down, as you can imagine. I mean, everything was, it was the worst week for markets in a while. So tech down 7.5% on a median basis. It's basically the same as the NASDAQ. So broad liquidation across NASDAQ, tech stocks, all of that stuff. Healthcare down 10% for the week. Again, healthcare, I've been saying this for several months. Healthcare is very difficult to be, just invested in and holding. I mean, you kind of really have to know specific stories about what's going on, because as a sector overall, it's terrible. I mean, it's constantly underperforming. And you can see even this week, everyone's talking about tech stocks, how bad they're doing or whatever, and healthcare was worse. So, you see all of these things and it's like, how can you even have any confidence in a sector like this? Basic materials down 4%. Crude hit a high of 90, I think 91-ish or something on WTI, but sort of reversed from there. And also you have hedge funds that are really starting to lean on these material stocks as far as like oil and gas producers and things like that. So they softened up this week. Even though this sector overall was down only 4% in the crude and oil and gas and energy names, it wasn't a great week. Financials down 3.5%. I mean, this is kind of like a standard down financial week, big down financial week. And consumer goods down 5%. Services down 6.65%. So almost 666. Industrials down 7.6%. So, I mean, everything was bad. So minus, with the exception of utilities that were kind of holding flat by some, miracle almost, because bond market was falling apart too. So subsector wise, only thing up really was nuclear. I mean, again, this tends to be a very niche sort of group that people trade around during times. I don't know, maybe people are preparing for nuclear war or something, if that's a meme out there. But nothing else really up. You can see that as far as green sectors go, we don't even have 20 of them that are up. And on the downside, we have a ton of stuff that has just gotten smoked. The worst of which includes, spec healthcare sector, EVs, drugstores. We have the Rite Aid bankruptcy. Walgreens, CVS. These stocks are just terrible, and they were one of the worst this week. We've got some semiconductor groups sprinkled in here, and another solar, airlines, some economy, some sectors that are weighted heavily to the economy, not doing too great. So we've got another 25, we've got 75, we've got 100. We've got 121 sectors down over 5%. So this is the worst week that we've had in the market in a long time, like several months, going back to maybe before, definitely before the summer. Probably it could even be the worst of the year. I don't know off the top of my head. I would have to actually go back and look, but yeah, it was not a good week. Just liquidation everywhere. So a lot of people are expecting, based on the Fed's rhetoric, that they kind of have to start pricing out some of the rate cuts for next year, and maybe hunker down for a higher for longer rate regime, even though Jerome has kind of been telling us that for several months. People started to finally believe him more recently. They had the meeting before, but then this week there was a lot of the liquidation. So yeah, I mean, it is what it is. That's kind of the regime that we're in right now. If we go to breadth by market cap, let's see, got 5 to 10 billion. 5 to 10 billion, down 6%. Got 10 to 50 billion, down 5%. Oh, sorry. Let me start at 1 to 5 billion. Let's start over. Okay, 1 to 5 billion, down 6%. 5 to 10 billion, down 6%. 10 to 50 billion, down 4.5%. 50 to 100 billion, down 4-ish. And TerraCaps only down 3.6. So that's it's a little stronger than what you might think, based on the NASDAQ having one of its worst weeks of the year, or the worst week of the year, and S&P as well. So you would expect this to be maybe closer to 4.5-ish, 5%, somewhere in there. But yeah, it held up a little better than that. So, I wouldn't say it's positive, but it's slightly better than what the headline indices suggested. So as far as intelligence for this coming week, we've got Ethereum bullish, trannies bullish, biotech bullish, cloud computing bullish, semis bullish, energy bullish, S&P bullish, and oil and gas, equipment, services bullish. So really, I mean, Stocklabs kind of looking for a bounce across a lot of sectors, after such a week that we had. That's probably not unreasonable. On the downside, let's see. We've got VIX is bearish. Retail is bearish. Financial bear ETF is bearish, so bullish financials. Ultra short Qs is bearish, so bullish the Qs. We've got coin, that's Coinbase, is bearish. Baba is bearish. Fang is bearish. Okay, kind of interesting. And Apple is bearish. So yeah, it's a little bit mixed the way Stocklabs is seeing this. I mean, in general, it's looking for a little bit of a bounce, but it's also saying that, the trends in some of these, especially if you look at something like Apple and Fang, these have been sort of the horses all year. Stocklabs kind of saying that it's looking for the trend lower to continue in those. So I'm not sure how well the market's going to hold up, and if that's the case. Now, one thing I will say, we have some oversold conditions in the market based on Stocklabs algo. A lot of people look at this 3-month. I'm just going to zoom out a little bit to 6-month. So we've got 21st and 22nd. I think that was Thursday, Friday in the market. Yeah, Thursday, Friday in the market. Stocklabs saying market's oversold. So, from this standpoint, we would really expect a bounce. We also have a 12-month oversold signal on the market, which hasn't happened since an entire year ago, I think. When was this one? This is, let's zoom in. Okay, September 23rd, 2022 was the last 12-month oversold signal. And we have basically to the day, this is September 22, 2023, that we just had this 12-month oversold signal. Now, in 2022, this didn't mark the absolute low. The absolute low came a few weeks later, I think in October, and then also retested it before the end of the year. But, sort of this became a line in the sand, at least, after it kind of, it became a line in the sand after we sort of dipped below it and recovered it in October. So I don't know if the same thing is going to happen, but at least for the meantime, I would expect a bounce. I think probably what you'll see on Monday is some follow-through weakness, at least in the morning. And then from there, you'll see buyers come in and start to mark up the market just into the end of the month, end of the quarter, all of this sort of stuff. Everybody knows that, there tends to be some window dressing thrown on just for monthly closes, quarterly closes. So I think just that general phenomenon coupled with, market is oversold here. I think you're safe to buy some dips, Monday, Tuesday, whatever, and sort of press them for the end of the week. Whether it's able to extend further into October, I'm not convinced of that, but at least we'll have a little bit of at least a relief rally in the meantime to try and play, and then we can reassess from there depending on how the tape is looking. So that's all from me. Hope you guys have a good week, and be back to see if any of this plays out or if the whole house of cards is just going to cave in on itself. So talk to you guys later. Bye.